Now you'll be good. All right. So I guess I just want to, often like each semester I hold this kind of evening class and I'm willing to adjust it if the time's not a good time within reason. Um, but I feel like I always get 3 or 4 or 5 people out of 50. And so I've always wondered if it's a real valuable use of our time. Um, Especially since some of the stuff we're doing here is I have recorded and available for you. And I'm also, so we can do this. And if something changes as we're, in a few weeks, and you're like, it'd be easier if we could just submit maybe questions to you, and every Thursday you would post a video that you've made responding to those or something, or whatever. But for now, this is my plan, is to have this like I always have, unless we figure out it's not really worth it to us. Um, so I'm going to share my screen with you. I just want to like give a kind of general piece of information here, a couple general pieces of information before we get to any questions or things you might have. So what I have up here on the screen is just the homepage of our course. One thing that frustrates people sometimes is how the announcements will drop off. So if you know that if you click on announcements over here, you can always see the older announcements too. Every week I put out a like welcome, to this week, and it kind of just tells what to expect this week. It also has the link to this meeting, and other basic information. Um, Here I've got some information on the tutoring resources. Uh, our tutors are super awesome, and so I recommend getting to know them. And then the way their little tutoring site is set up. Have any of you looked at it yet? Been able to see it?
And I
Okay.
haven't looked.
So it's set up like kind of like not a discussion board. It's like multiple discussions that get posted in there. And so you can post a question and the tutors will answer it, but there's also a place where you can schedule a live time to meet with tutors. And then they also have a schedule in there when they're going to do like little tutoring sessions that, where multiple people can sign in. So that's all here in this tutoring resources link over here on the left. That's worth checking out. And it's kind of like, know where all the help is before you need help. Don't wait till you're like drowning and then be like, oh, I don't know. Because for me, when I start drowning, I tunnel vision, and then I think there's no help for me at all. But if I know the resource ahead of time, then I might actually use it. And maybe you guys won't need it at all. Some people will be like, I got this class, piece of cake. But that's there. But then in
Oh,
the mod, that won't be you. This is so just so you know, this is a tough course. I don't, it's um, I think a lot of it's structural. In other words, I don't love the way they have it set up. Um, or I guess the weights where the exams are so heavily weighted and where you can't get into your quiz until you've got a certain score on the quiz access. That being said, I was on the committee when they did all that, and it has improved outcomes. In other words, people are scoring better and doing better, but still a lot of people are getting, it's hard for a lot of people. Um, so here in the modules, right under textbook information, I've added a little module called Brother Fox's Helpful Stuff, because I didn't know what else to call it. The first link here, if you forget which presentation time slots you signed up for, you can click on that and it tells you, it has the presentations here, then the groups, and then you can just find your name in here and know like, oh, okay, I have to do this week 3 one and it has to be posted by this date. Okay. So I know people forget. And so I wanted that. So I want people to know where they can see that information at, because the discussion board where you signed up closes down. I don't know why they set it up that way. So that's the first thing that's there. And then the second thing that's here in the helpful stuff is, sorry, you won't see this instructor resources thing that always pops up on mine. Is this additional study content? Okay, this is annoying. It's loading slow on me. All right, there it is, additional study content. And this is like just a Google Doc that I've like thrown together over multiple semesters of teaching this course. And so there's usually a little video I've thrown together. I tried to like tell you how many minutes of video is going to be before you have to get into it, so you have an idea, can decide if it's worth it. right? Like when you click on YouTube and you're like 7 minutes. No, I can't commit 7 minutes of my life to this. Anyway, so an overview of the chapters, and then you'll see like here, this says quiz access chapters 1 and 12, problem 11. When people get stuck on particularly challenging problems, I will sometimes create like a video walkthrough of it. Usually mine will have different numbers than yours because these problems are algorithmic so that they give new numbers each time you try it, but you can still see the process, okay? And so just know that if you're stuck on something, the first place to check is here in the additional study content to see, like chapter 2, we got a bunch of them that we did videos for because, well, it was a hard chapter for a lot of people. And chapter 11 is a biggie too. And then there's exam review materials in there too. So I think for some reason I'll always get somebody about 2/3 of the way through the class going like, I just found this thing. It's amazing. I wish I'd known this was here, right? And so I just want to show you up front that this is right there in the modules, right? It's just the second module down after the textbook info, then the helpful stuff. Okay, that was me talking a lot and really fast. Any questions about that, or other general questions about stuff before we try to maybe look at some chapter specific stuff?
And you may get to it. I do have one question if we can talk about it, and we may not be able to yet, but it was in the test. I could not get one of the answers right. The quiz, like
The
to
quiz,
open
okay.
up it was those 3 questions. That was the Apple and Google comparative.
Okay, so not in the test, but in the financial statement analysis
That's what it was,
assignment?
yeah.
Okay. Yeah, so we can look at that. Um,
Because that does cut down your grade.
uh-huh.
And I cannot figure out for the life of me why I got one of the questions wrong. I used the same methodology and I don't know if I'm rounding it right. And then it also threw me off when it says to answer in millions.
That throws a lot of people off.
You don't answer it in million. You don't answer out the whole. Because I was
Right.
thinking financial statements, you never report them. It's assumed that it's in millions.
Right.
And so I thought the answer was telling you to record it in
No,
in
if you put all the zeros, then you're answering in dollars.
wrong. It's
Right.
wrong.
If you put all the zeros, you're answering in dollars. So millions would have like 6 zeros dropped off. Thousands would have
Oh,
3 zeros. It's confusing. I mean, I don't feel like you're alone. You're not alone. It's confusing for lots of people. Uh, um, Especially because I feel like they just kind of throw you in there, and then like that's a concept some people work with, like as part of their jobs or other things where they, and other people are like, I never look at that. So yeah, when they say, so I'm going to say it, and I can see you understand it, but I'm going to say it, kind of repeat it so people maybe who are watching it later. So when we're asked to record something in millions, if something was 220 million, dollars, then we would just write 220 in millions. So to make something in
right.
millions,
220, comma 000.
no, we would write 220. We would
If
say,
you recorded in millions.
uh-huh. Because if I write 220,000,000, now I'm recording in ones, right? I mean, because I've shown it all the way to the ones place. So what we're saying in essence is that we are only showing to the millions place. And so what I would write as 222, and then if I had in parentheses in millions, would mean 222 million.
I don't think I'm tracking still.
Okay. So in
So I
essence, if
thought
it's
on a
something,
financial statement, if
here, let me
you,
just pull it up.
yeah,
How-
okay,
Let's
that
do
would
that.
help.
Okay.
Very,
Give
that
me
would
just a
help.
second. Oh, let's see. All right. Now, this is, anybody who actually watches this video is going to get a treat if they haven't finished this yet, because this has the correct answers in it. And this one's not algorithmic, so it just uses the same one. So you're like, wait a minute, can I still? All right. Maybe I should do that periodically, and then people are like, dang, I should watch that video. That guy gives away the answers.
Oh,
All right. So if I'm writing $365,725,000 in millions, it means I just drop off the zeros.
right.
Actually, that's 365,725,000,000 is what that is.
It
So what,
is.
yeah.
So then I misunderstood it, because I thought when it was written like this
Mhm.
was millions. So if there's a comma,
Right.
it's billion.
A billion is 1,000 millions, right? So this is 365,000 millions, or $365 billion, which is a lot of dollars.
Okay.
I would like just $1 billion. I mean, is that too much to ask for?
I'd settle for 1 million.
So I mean, really all it means is, if you think of, like, if you go back to like grade school, when you're like, the ones place, the tens place, the hundreds place, when we're writing something in millions, it means this digit to the farthest right represents the millions place. And then that's the 10 millions, the 100 millions, the billions, 10 billions, 100 billions, etc.
So just to clarify that, though, the confusing part for I ended up just putting it in because I assumed maybe it was just a typo, because this number, how it's written at top, in other business classes, they report in the thousands. And
Mhm.
these numbers look similar to what I had seen before. So I assumed it was a typo and not billions. Now, when you're clarifying that that is millions, that seems a little more confusing, because how would you possibly know if the top figures were in millions or billions, or if those were in thousands? So would it be
Well,
3.5, or because
it
there's
tells
no
us right
reference
here that
below
it's
the
in
thousands?
millions, right?
Oh, okay. Oh, you're right. Yeah.
Yeah, it's labeled.
Awesome.
But I think what it tells you to put your answer in millions of dollars, that throws everybody off. If it didn't say that, they would just use these numbers as is and they'd be correct, because we're already in millions up here. And so we're just, but I think that's confusing people.
So if there was no comma, it's what's written there. If it was just like 365 and nothing behind the comma, it's 365 million.
Yes.
Okay. So do we always have to watch through this class? Will it change? Will it ever change for millions or thousands or billions?
Yeah.
It does. Okay.
So like, yeah, like, no,
to
like
watch.
accounting is like the most ridiculous, like, attention to detail sort of thing, right? Like but what happens is you get used to it. It's like, when you're learning another language or something like that, and this isn't as hard as learning another language, but like, things that seem so foreign to you at first just become natural, and you're just like, so you start to notice those things. But yes, you have to know what units you're working in, and so you got to look for that.
Okay. And by the way, they will not come natural to me. Just to be clear.
So which one was the one that you were feeling like you just couldn't get right?
The percent and the required number 2.
Okay. So return on assets.
Where's the one that has both? Maybe it was the second question, because it had the 2 percentages.
Oh, the second question. Okay.
I think maybe it was the second question. And what's on required number 2? Yes.
Right.
Where did you get 14.3? I kept doing the math and getting 13.2.
Right. So our return on assets, right, is going to be our net income,
right?
Divided by our average total assets. So, and by average, what we're saying is the challenge is this: net income measures revenue minus expenses, right, over the course of a period of time, in this case, a year.
Mm-hmm.
But our assets doesn't measure the assets over a period of time. It just tells us what our assets are right now in a given moment in time. And so we get some lack of parity between the time, because one represents a period of time, one only represents a moment in time. So what you do is you take your assets from the beginning of the year and your assets from the end of the year, and then add them up and divide by 2, and that'll give you the average assets across the year. Okay. So our formula then, so for, let's see, we're looking at Google, right? Is we're going to take, we know that our assets equal our liabilities plus our equity. So we can use this number as our assets number as well. Okay.
Okay.
So if I take, and we also know that our prior year's assets, really that means what was the value of our assets at the end of the prior year, which also means what was the value of our assets at the beginning of the current year. Okay. So the end of last year is the same as the beginning of this year. So by taking the assets at the beginning of the year plus the assets at the end of the year, dividing by 2, that gives us what's called the average total assets for the year. And so we just take, I don't know if you can see this right here. I've got the formula right here. We take the net income divided by the assets at the beginning of the year plus the assets at the end of the year divided by 2. And that's how we get 14.3.
Okay.
The reason Apple worked and Google didn't is because the assets at the beginning of the end of the year were close enough.
Yes, that's what I like. Yep.
That the answer was within like the same rounding error, right?
Yeah.
Either way. And so if you just took like this number and divided it, it still worked. That's the worst for me, is like when I think, okay, I think I understand this, and then I follow the exact same pattern and one works and the other one doesn't. That's like getting punched in the gut, or maybe getting your lunch money stolen or something. I don't know, something unpleasant, whatever it is. Okay.
How should I have known that? Like, why did I not pick up on that in my studying?
I don't know, because the formula is given right in the book. But I think, again, this is a pattern you'll start to see over and over when we're comparing an income statement item with balance sheet items, that we often have to take the average of the balance sheet item, because it's, and so it's, again, it's one of those things that you learn more with practice, or, or some people, it's more natural to them because they're just like equation people. And so they look at that equation and they see, oh, it's an average total assets, but it's just giving me the assets here. And so if you're like most of us, and that you're not an equation based person, then probably you learn it by trying it once and getting it wrong and being like, what did I do wrong? And then you dig into it and go, oh, okay, now I see. And then you learn it. Like, that's how I learned most things in life. I got lots of scars to prove it, right?
Okay.
One of my 8 children is a vicarious learner. She would just avoid getting in trouble because she'd see other people get in trouble and be like, I don't want to do that. But the other 7, nope, they just had to get hurt themselves every time. Anyway, that's kids.
Okay.
All right, did that help?
A lot.
Okay,
Yes.
good. So, all right. So any other questions? I do have, I could walk you through a couple of little things if you want. I also, there's like, I have a little slideshow of a few transactions to show you kind of how they work with the fundamental accounting equation: assets, liabilities, and equity. There's also, in this additional study content, a video of the same thing in my overview, but like I said, it's about 15 minutes. Is that like something worth looking at, or?
Yes, I think so. I did have one more question for you that I didn't take the test yet because I wanted to ask this question first and be prepared. So is the test going to be more like what we saw with the financial statement analysis, or is it going to be more like what we're doing in the book?
So when you say the test, I want to make sure that we're using the same, we're talking about the same thing because we have exams, but we haven't got to any of those yet. Those won't be till after chapter. Do you mean the quiz or the quiz access or the?
Yeah, the quiz.
Okay. So the quiz. So let's see. The quiz access, and by in the book, you mean like the smart book assignments?
So yes, so
Okay.
the smart book, so I'm waiting to do, I'm pulling it up right here. Yeah, so I'm waiting to do the quiz for chapters 1 and 12.
Uh-huh.
And wait, there's the quiz access and then the quiz in the chapters.
Right.
The 100 points.
Yeah, you know what, let me kind of just explain how these each of these units is broken down. That might be helpful because I think it's a little bit confusing. So typically they start you off with these smart books, which are like these guided, walk you through the textbook and then give you example problems to work out, right? And then at the end of the week, they have us do a financial statement analysis where they have us look at actual companies' financial statements. Just so you know, everybody hates those. You're not alone. And then we have the quiz access and the quiz. And so the quiz access, even though it looks like quiz access is worth 100 and quiz is worth 100, recognize that they're in different grade categories and that quiz access as a whole are only like 5% of your grade, whereas like the quizzes as a whole are like 15 or 20%. It's like a bigger chunk of your grade. The way it's set up is you can't take the quiz until you score at least 85% on the quiz access. So this you can take multiple times, improve your score, get it where you want it, and then take the quiz. But the term quiz sounds maybe scarier than it is because even these quizzes are set up so that you can have, give me a second here. If we look at the policies, so they're set up so that you can have check my work 3 times. You get 2 attempts on the quizzes. You're allowed to use your book or other resources if you want. So the quizzes are not like an exam, and they're more like problems to work out. Like think back when you were a kid and had like end of chapter problems in a math class or something like that. They're structured more like that than like a multiple choice exam question. So anyway, so
that's like what we're doing in the smart learning, and probably more like maybe that financial statement.
Yeah, but not as
in the blanks.
They're not as, yes, they're fill in the blanks, but most people don't find them as maddening as the financial statement analysis, because what they typically do is they kind of focus on one aspect and then you kind of go through them and do it, and then you move on to another question instead of the financial statement where you have to look on a financial statement that sometimes uses even slightly different terminology than what's in the book. And those are the things people find frustrating about the financial statement analysis ones. And the reason they do is because they're actually showing you real world statements, and sometimes real world statements use slightly different wording.
Yeah.
Instead of cost of goods sold, it'll say something like cost of sales or cost of revenue. And like just those little things throw you off until you've been doing it long enough to be like, oh, that's the same thing. Anyway, so I hope that helps.
What assignments can you stop in the middle and then start again?
So you should be able to do that with any of these Connect assignments. The only thing you shouldn't be able to do that with is an exam. Right.
Okay. And we can use our notes on our computer for any, or can we even use the book for any of those assignments?
Except for the exam. Mm-hmm.
Okay. Do we get notes on our, do we get like 1 page of notes for our exam?
No.
Nothing?
No, then that's the thing that people don't like.
A dagger to the heart.
Oh my gosh. Just like a formula. Really that's what I need, is those formulas.
I know it's brutal. Don't kill
This
the
seems
messenger.
so hard for a 200 level class.
Yeah.
I have taken easier 400 level classes.
Yeah, no, so I teach this same course in Arizona where I'm a full-time college professor. And with the exception of the very first exam where they're learning about debits and credits, which you guys will learn about next, which are things I think they're kind of like times tables. You need to memorize them because they're so foundational to things. Everything else I allow 2 pages of notes, because I find that when they go through and review and take the notes, they're doing a lot of learning at that point. And because I've never been called upon in real life to do accounting when I don't have, like, I'm never struggling across the desert and suddenly I need to, do some journal entries. Like I always have access to the internet. And so
Yes.
for whatever reason though, BYU, because we've had this discussion over and over about should we allow notes, can we allow notes, and above my pay grade they've decided no. And so that's that. If you want the email address of the accounting department chair, you can send him an email. He's actually a really great guy, and
I'm sure that many people have sent that and it's done no good. So
well, they have, and it's in the way it's like a committee that makes all the course decisions. And so for whatever reason, and they're not alone, there's other universities that don't do notes for this. I think a lot of universities see financial accounting as a hurdle type class, one to prove that people are serious about the subject or something. And that's, calculus is one of those classes, or business statistics. There's a handful of classes that, and they're like that in any program, right? Engineers have to get through differential equations, and pre-med have to get through what's the one my son just got killed by? Organic chemistry
Anatomy.
1 and 2. Yeah. Well, yeah, actually all of them. Anyway, sorry, that was a long way to say no, you can't use notes.
where are you in Arizona?
I'm in southeastern Arizona in Safford.
Safford.
So I work at Eastern Arizona College,
Okay.
or as we like to call it, BYU South Campus.
Oh, really?
It's like a 70% Latter-day Saint population down here. So that's the joke, even though it's a public state-run school, but like our institute is bigger than like ASU's. There's more student, we only have 4, but we have 4 student wards in our institute, and ASU has like 2. So
Wow.
with their 80,000 students, they have 2.
Yeah. Okay. Interesting.
Anyway, okay, so let me show you one little thing here. Where did I save it at? There it is. All right. So again, some of this may be pretty basic to you guys, and in other ways it may be useful. So I'll show it. So there's our basic.
Your videos were really good, by the way. I appreciate that.
Oh, thanks. So our basic fundamental accounting equation, and again, this is kind of the stuff I show on those videos. So if you ever want to roll back and look at them, you can. But it's that our assets have to equal our liabilities plus our equity. And what that means is everything a business owns, from cash to buildings to land to equipment to inventory, either has to be paid for through debt, which is what a liability is, money you owe to someone else, or through equity, through money that's either been put in by the owners or has been earned by the business. Okay. And so that's it. Okay. So this little one down here in the gray is called the expanded accounting equation. And so we're going to say our assets equal our liabilities, and then it just breaks down what equity is. And equity is either money put in by the owners, that's called contributed capital, or money earned by the business, that's called retained earnings. And then it further breaks that down. Contributed capital in a corporation is called common stock. That's the money that people who own the business have invested into the business. And retained earnings is made up of revenues, the money that you make from selling stuff to people, minus expenses, the cost of earning those revenues, minus any dividends, which would be a portion of that profit or net income that you pay out to the owners. So everything in accounting hinges on this equation. Anytime we make a transaction, everything still has to balance. So our assets still have to equal our liabilities plus equity, which means every transaction does one of a few things. It either increases an asset and decreases an asset by the same amount. That would be like if I paid cash for another asset. I bought a piece of equipment for cash. My asset cash would drop and my asset equipment would go up, and then everything would still be in balance. Or it increases assets and increases a liability. That would be like if I borrowed money, right? My liability or debt would increase and my asset cash would increase. Or an asset increases and equity increases. Like if the owner contributes $50,000 into the business, asset cash would go up and equity would go up. I mean, that's really, and then the opposite, right? Liability assets could go down and liabilities could go down, like paying off a loan, and assets could go down and equity could go down, like we pay dividends or a share of our profits back out to the owners. And that's really it. And so even though it seems super complicated, in time, if you work with it, it becomes a relatively simple system. It just takes time. It's like anything else that's new. It's hard. You know, if you've ever learned to play piano, it was hard when you first started. It might still be hard. I don't know. My son, who would never practice but could like play lots of cool stuff by ear but never read music very well, he's on his mission now, and we told him, we warned him, but every ward he's gone to, he's the pianist as well. So he's down in Brazil, so he's now having to learn to read music. That'll teach you, kid. So I'm just going to step you through a couple of transactions, okay, and show you how they impact this equation. And we can go through a few, and if you want to go through more, we can. But here's an example. So the owner, good old Chaz, he invests $30,000. I guess Chaz is, I don't know. Okay, it doesn't matter. Chaz invests $30,000 cash into his new company, their new company, FastForward, and receives common stock. So I always go through this first. I still do this to this day. I say, okay, what accounts are being impacted? Cash and common stock, because common stock is money the owner puts in. What's happening to them? Cash is increasing, common stock is increasing. And then I'm sort of prepared to see, well, how that impacts the accounting equation. So my assets go up by 30,000, my equity goes up by 30,000, still in balance. Oh, by the way, because we're on like Zoom, if you have a question, just say it. Like, it's so hard to like try to do the hand raising thing or whatever. You can just interrupt me. I won't even get offended. And if I do,
will you post these Zoom meetings?
Yes.
Okay.
If I do get offended,
I know I
I'll
won't be
get
able to
over
stay
it.
on very long right now.
Okay. So I'll just go through a couple more of these. So here we purchase supplies for cash. So he purchases 2,500 or supplies and pays 2,500 in cash. So again, in my brain, I go, what accounts are being impacted? Well, supplies and cash, and supplies will be going up and cash will be going down, right? Like I could talk myself through that. And what happens when you're first learning it is you're still figuring out, like, I still don't fully get what's an asset. I know it's stuff you own, and that's okay. That's normal at first. But once you know that, then you're ready to be like, okay, so how does this impact the accounting equation? And we'll say, okay, cash goes down, supplies goes up. We're still in balance. Assets still equal liabilities plus equity. This relationship of assets equaling liabilities plus equity is so fundamental that in time, as you use it, it develops, like I call it a sniff check, like that ability to open up milk and know you should or shouldn't drink it. Like, because you see how these things interact with each other, you can do an entry and be like, ooh, something's not right there, right? And you catch it before, so like accountants who are doing it professionally, they make errors, but mostly they catch their own errors because they've developed good sniff checks over time. I'm not good at sniff checking milk. That's why I got married. Probably why I'm still alive. My wife, she's got a super sniffer. All right, so we purchase equipment for 26,000 in cash. Again, cash is going down, equipment's going up. And then we can see how that impacts our equation. Cash is decreased by 26,000, equipment increases. You may have noticed that in financial notation, they do negatives with parentheses around them instead of putting a negative sign. Again, that's something that some people are like, yeah, I already knew that. And other people were like, why? And I'm like, I don't know, maybe that same Italian monk who came up with the whole debit credit thing. You like parentheses. I don't know. I forget his name. The guy that came up with this like in 460 AD. So we've in essence been doing the same thing. Apparently it's hard enough that, 1500, 1600 years later, I still have job security teaching it. So that's cool. Maybe could have thought of something simpler, but. All right, purchasing
Thanks,
supplies.
I'm sorry, I gotta leave, but thank
Okay.
you.
All right, we'll probably get offended when you leave, but then we'll get over it.
I'm sure you won't, but I
Okay.
appreciate it. I'll watch the Zoom later on tonight.
Okay,
Thank you.
thanks. So Vicky, I was going to ask because I don't know if Audra's still on, or I know she was dealing with lots of,
Yes, I'm still here.
Okay. I can't see you, Audra, so I don't know. You could be playing video games for all I know.
I have a bright light in the back, and I thought that might be incredibly distracting for everyone else. Sorry.
We might feel like we're being interrogated. So are going through these transactions valuable, or is it kind of silly? You know what I'm saying? I don't want to waste your time. We can go through a few more. We can skip to looking at the financial statements and talking about those.
I don't know about Audra, but this is actually one thing I feel pretty comfortable in. I did take the oh gosh, what class was it? The
Kind of
one
like
where
a fundamentals of accounting type of course or something.
and then the CAPSIM
Okay.
course. I took both of those where you have to like create financial statements from different details. I did that. So I do kind of know some of
Okay.
this.
Well, like I said, there's a video out there too that people can look at if they want more of it. So I am gonna skip down, unless you are like, no,
Oh,
don't
no,
do
I'm
it.
ready to move on. Yeah, that'd be
Okay.
great. Thank you.
So I'm just gonna skip down to, because I've got a bunch of transactions, because for some people they're intimidating. So I just want to kind of show you some examples of the financial statements. Again, if you've done this before, it may be pretty easy for you, but a couple things that matter. First, the income statement summarizes revenues and expenses. And revenues are the money we make by selling what we sell, whether it's services or products, right? So this company, FastForward, they have consulting revenue and rental revenue. So they're making money from doing a couple different things. And then the expenses are the cost of doing business. And really, if you think about it, they're the cost of earning revenue. And so it's always set up like this, with revenues minus expenses gives us what's called net income. You'll sometimes hear this called net profit or just profit. And so those words get thrown around interchangeably. But another feature that really matters, okay, is the fact that this income statement says for the month ended December 31st. So I know this is only a month's worth of revenue and expenses, not a year's worth. And so I know that it is for a period of time. All revenues earned and all expenses incurred during the month of December 2020. Okay, that's important. So the second main statement that we look at is what's called a statement of retained earnings. And retained earnings is any money the business earns minus any money that it pays out. Okay. And so we don't worry about revenue and expenses. We're just going to take the net income and we're going to put it right here. So the format is always the retained earnings at the beginning of the time period, plus any net income, which is revenue minus expenses, minus any dividends, which is money that we pay out to the owners, okay, a share of the profits that the owners get. And that gives us the retained earnings at the end of the period. Again, you'll see that this is measuring a period of time for the month ended December 31st. So we need to do our income statement first because the net income is going to flow into the statement of retained earnings. And then we have the balance sheet. The balance sheet just tells us, people think it's called the balance sheet because the assets equal the liabilities and equity, and therefore it balances, which, sure. But it's really called a balance sheet because it shows the balances of all of our permanent accounts, which are our asset accounts, our liability accounts, and equity accounts. It's a summary of the balances of our accounts. Okay. It is true that it balances, that our assets equal our liabilities plus and stockholders' equity. You'll usually see them either formatted with the assets on the left and the liabilities and equity on the right, or with the assets on the top and the liabilities and the equity on the bottom. And so our assets are all the stuff the company owns. In this case, it's cash, supplies, and equipment. Liabilities are debts. So in this case, they have accounts payable, which is money we owe typically to our vendors, is what accounts payable is, people we purchase supplies and things from. And then our equity, which is always made up of common stock, which is the money that the owners have put into the business, invested into the business, and retained earnings, which is any money the business has earned through net income, minus any amount it's paid out to the owners in dividends. And so all of these assets, cash, supplies, and equipment, are either paid for through debt, in this case, $6,200 in debt, or through equity, meaning what we've put in or what we've earned. Another way of looking at equity is it's the amount of the business, it's assets that actually belong to the owners, right? If we close this business out today, we'd have to pay off our debts, $6,200 to our creditors, and then whatever's left over, that would actually go to the owners. You know, in a situation where we liquidated all the assets of the business, how much would the owners get to take? Their equity. Okay, that was a really long explanation, but it's one that I feel like I wish someone had given me, although I think probably when I was taking this class the first time, I say I wish someone would give me this explanation, but I wouldn't have heard it because like it's something that like I kind of heard it, but it's like when someone tries to explain a board game to you, right? And you're like, oh yeah, I got it, or a new card game. Yeah, and then you try to play it and you're like, whoa, but after a few practice hands, it all settles in, and then the instructions they gave you before start to make sense, whereas they didn't without the context. So I may have just explained a board game to you, and hopefully we'll get some context over the next couple weeks. All right. So that's what I got for you. And we're actually coming up on an hour. So, which I don't know how you guys work, but my brain only lasts as long as my tail. So about an hour is where state conference is tough for me. Okay. Got to sit in the soft seats or else I'm just going to be gone after an hour. Okay. But if it's soft seats, then I fall asleep like the temple. You're just like, I'm going to focus. And then the lights go out. All right. Any other questions, comments, concerns I could address at this stage of the game?
Not for me.
All right. And see, even my watch is telling me I'm supposed to stand up. Huh?
Yeah.
Everybody's pestering me now. My wife doesn't like that. She's like, that's ridiculous. I'm like, I set it to tell me. Okay, this is a reminder from me, not from my watch. Anyway, okay, then I guess we'll offer a closing prayer, which can either be me or Vicky, because I mean, I guess Audra could do both, but that'd be weird, kind of.
Go ahead.
What's that?
I'll give you a break from talking.
Thanks. I know I'm a talker, and I apologize for that.
Our Father in heaven, we're grateful that we could come together and have this opportunity to learn, and we pray that that will help us and guide us this rest of the week, and that we will have success in retaining what we've learned. And we pray for these things in Jesus' name. Amen.
Amen. All right. Thank you very much.
Thank you
for your rapt attention.
Thank you so much.
All right. And thanks for sparing us the bright light, Audra. All right. Have a great night.
Bye.
Bye.